now more based in Stellenbosch, but with this year, everything just moving around through the country, working from home or wherever. Yeah, my passion is definitely fintech and edutech, so to educate and also mentor, and yeah, I just like trying new things, and yeah.
Thanks, Igor. Charles?
Cool. Firstly, thanks for having me on, Kerry. It's always lucky to speak to students. Yeah, so Charles Savage, CEO of Purple Group, been in fintech for 20 years. Only got popular in the last 5, but been around building technology systems for trading and investing since the late 90s, actually, so more than 20 years. Got into it because I double majored in accounts and information systems, worked out quite quickly that I was a bad accountant and an average programmer. And so I ended up programming, and programming led me to customers. And at the time, the customers that were spending the most money were either in the travel industry or financial services. And so that journey started back in '96. And I'm here today. And most of what I do today is all about EasyEquities, which is sole purpose is to democratize access to all things investing, and ensure that we eliminate the friction points that we find in the ecosystem, and so that more and more South Africans can take up investing for the first time.
Okay, perfect. I guess maybe just continuing on that same vein, and seeing as EasyEquity seems to be on everyone's lips these days, how did the Purple Group start, and where are you now, and sort of what do you have envisioned for the next 5, 10, 15, 20 years?
I don't think that far ahead, but I'll tell you as far as I can see. I mean, the Purple Group started. It was actually, I think it was a cash shell on the JSE, and Mark Barnes bought the cash shell and he used it as a private equity vehicle to house some of his own assets. And then he attracted some other investors, and they started buying a whole lot of financial services business. And Mark was quite ahead of his time, in that he was playing in the fintech space when it wasn't that popular. This is back into 2006, 2007. And the biggest acquisition he made was a company called GT247.com, which I was the CEO of. And that's how I ended up in the Purple Group. And that was towards the end of 2007. I took over as CEO of GT247. I remained CEO of GT247 when it was taken over by the Purple Group. And at the time, we had customers in 44 countries and had trade access to 44 different markets, and had built a $2 million startup into a 36 million euro takeout. And I took over November 2007, and in February 2008, Valentine's Day, in fact, we shut down almost that entire business. The only business that still exists today is the South African business. And then out of that, we needed to raise capital to stabilize our balance sheet, and we had to come up with new ideas to resurface the group. And it took us a long time to work out what we really wanted to do. But fast forward to 2013, I was reflecting on what brought me to the industry and why I was so passionate about it in '96. And fundamentally, I felt that technology was going to disrupt and democratize access, but the ecosystem back then wasn't strong enough. There were I think there were less than 2 million credit cards. You were accessing the internet over 28.8K modem, which most people in fact, everyone on this call is not going to know what a 28.8K modem feels like. That's not even, there's no G in it. And the websites that we were building were largely brochure websites. They weren't transactional. But in 2013, those excuses had evaporated, and I was sitting on a beach in Mozambique with my family, and I asked them a really simple question, was like, why have you never bought shares? I'm a share salesman, have been for 20 years. And the response that they made, it was just so enlightening. I mean, my son said, it's intimidating, Dad. I've downloaded your platforms and I don't understand what they do, and I'm too embarrassed to ask you because I know you think I should know. And my wife said, yeah, you sit around at dinner parties and you talk about PE ratios and dividend yield, and I see it as an exit point from the table because I've got no contribution to make. And so the conversation went on, and I realized that what we had done in financial services is we had created this exclusive group where we spoke our own language, we used these sophisticated front ends, and the group was just getting smaller and smaller because we hadn't bothered to understand what people didn't understand about investing. And so I came back from that holiday in 2013 with a vision to create EasyEquities, to democratize investing. And that's taken us on the most unbelievable journey. I mean, today, our goal back then was to be the largest stockbroker in South Africa by client numbers. Today, we're 7 times bigger than our largest competitor. And that didn't happen overnight. You know, that actually, we reached that milestone to be bigger than the largest in just, I think it was January this year. And then in COVID, literally more than doubled the size of the business, which was an unexpected event. But we had lots of momentum going into it. So the last 5 years have really been about understanding the friction points to investing as they apply to the South African marketplace, and looking at introducing new products and services that our customers have an affinity with, or there's demand for. And largely, our strategy has been delivered by customers asking very passionately for things that they want to see in their investment universe. And an example of that is Easy Properties, which we launched 3 months ago, which is fractional access to large-scale residential developments, where as a South African with R1,000, you can go and buy R100 of 10 different developments. Some have got high-yielding property, some are low-yielding, but high capital growth, and a blend of all those kind of things. And you know, the next 5 years are going to be similar in that our customers will lead us to what they need. We're not going to try and discover that in boardrooms. We'll discover it through our customers. But then I think the thing that is significantly different from the last 5 years is we've built a very successful South African business and brand. We think we're good enough to do that in other places. There are less people all around the world that own shares than you would think. It's not unique to South Africa. It's not a South African problem. And so we want to go and fix it in lots of other markets around the world, starting with Australia, where we launched 2 weeks ago. And you'd think that, you know, Australians got the highest investment rate amongst its citizens in the world, but that number is 35%. That means 65% of Australians don't invest. So there's a much larger market opportunity if you focus on people who haven't yet started investing. And then, you know, from the reason we chose Australia is because we love what the access it gives us to Asia. And there's some very interesting markets in that time zone, Indonesia being one that we really want to get a handle on and see if we can get a market entry. And then Africa is really our unique opportunity for us. I mean, we're here at home in Africa, and you know, we've got a much stronger cultural connection to Africa than we have to Australia. So our first African entry will happen hopefully within the next 6 months. We've been working really hard on opening partnering in Kenya. And I think we're pretty close now to signing a deal with a large Kenyan institution and starting doing business in East Africa, and that'll give us a springboard to the rest of East Africa. And then we might go further north. We're a bit scared of North Africa for now. You know, I think we can learn a lot still here in South Africa and East Africa, and you know, we'll get to North Africa. That's where the big customer numbers are, but a little bit intimidating for us just yet. And then turning to Europe. First of all, what I would call first-tier markets in Europe are very crowded with fintech players. So there are lots of people that do things like us. And we don't want to go to places that are crowded. We want to go to places that other people have almost been too scared to go because regulatory hurdles are too high, or there are significant language barriers, or there's low levels of education. So Eastern Europe looks more interesting to us, and we're looking for market entries in Eastern Europe. So the next 5 years are going to be dominated by us trying to prove what we've done in South Africa internationally, and to shift our revenue and focus into hard-based currencies. And then alongside that, we want to continue to lock our distribution deals. I mean, we announced a fantastic deal with Capitec, went live on Monday. I mean, I still pinch myself about what that means for South Africa and for our business as well. I mean, we're now inside the banking rails of Capitec, so every single banking customer who has the Capitec banking app has now, at literally the click of a button, can start investing. We want to replicate those kind of distribution deals. We think a telco deal would be a great one to do, and you know, we're talking to all of them in South Africa. The nice thing about telcos is they are pan-African. and sometimes, global. I mean, Vodacom is everywhere, but if we were able to do a deal with either a Vodacom or an MTN, then it gives us a pan-African access strategy. So that's a very key focus area which we'd like to lock out. And they're all talking about fintech and playing in this space, and none of them, to my knowledge, want to build what we've built. So I think a partner opportunity is a very tangible and real one for us. And then, I think as the distribution of the business grows, and we have the most valuable, and I don't say this arrogantly, we are growing the most valuable financial services consumer distribution base in the country. I mean, let me give you some demographics and to describe why they're so valuable. I mean, the average age of our customers it's about to go under 30. It was 35 when we started, and it's about to go under 30. There isn't a single financial services company that does what we do that has anything less than an average age of 55. So, the future wealth of this country is sitting on our platform. And it is the only platform that I have got no evidence of it, but I'm confident it's the only platform that truly represents the demographics of South Africa in age, in gender, in everything. And for us, that's also an incredibly exciting opportunity. And in understanding how valuable that community base is, if we keep them and we keep them happy for a long time and keep them engaged with our brand, we'll have lots of other product opportunities that we can then push down those rails. So Easy Properties was one example, but we've partnered with a crypto company to put a crypto index and distribute it into our rails called DCX, which is just renamed EC10, which stands for Easy Crypto 10, and it's the top 10 cryptocurrencies weighted by market cap. And that's actually owned. One of the owners in that is Michael Jordan, and we've partnered him in giving him distribution, and we're taking an equity stake in that business. And we're going to do a lot more of that. But it's not that we're sitting here wondering about the products that we should build for that community. We survey our customers once every year. We do a big survey. The next one is coming up pretty soon. And from that survey, we get deep insights into what's missing from our customers' financial lives. And then we set about going to fix that. And so we're not as strategic as you would think we are. I don't think 5 years ahead. I look at what my customer needs are today, and I try and meet them in the next 12 months, and where I can't, push them out into longer time frames. And then I think importantly for me, I want to prove that a South African fintech can do business on a global stage, and that we can disrupt some of the bigger markets, because what we've done here is in a really tough market conditions. I mean, if you think about the economic fundamentals of South Africa, and the educational barriers that South Africa presents, and the fact that we've had no GDP growth, we've had no job growth, we've had no equity growth. So in the last 6 years, we've been faced with a perfect storm of conditions that should have conspired against us being successful. And yet we've been really successful. So I think if we go into other markets where some of those ingredients are not against us, so, as an example, in Australia, every Australian, there's no unemployment in Australia. Every Australian's got a job, they've got a good wage. Most of them are highly educated. And so the factors are in our favor. I think we can have even bigger success. Excuse my dog screaming in the background.
No, that's all right. No, thanks, Charles. Thank you so much. Hugo, I think similarly, maybe if you could just tell us about what FinMeUp is all about. I guess what is it that you guys do? How did your background inform sort of what you're doing now and what you guys are trying to achieve?
Sure. So FinMeUp is a financial education business. So our vision focuses on three aspects, and that is to educate, to equip, and to enrich. And not only educate, but find ways for our users to help our users go from education to execution. And that leads us to our motto, be your own boss, so that they can be their own bosses of their finances. So our platform allows this vision to become ever increasing reality. So we're adding more features, adding more products. So basically the current app has various aspects of each of those three branches in the vision. So the education, the equip, and the enrich. So we are also working on new developments. So one of the biggest to date, and which is very exciting, is FinMeUp. So it's our own digital university, and our motto for that is what school and university didn't teach you. So the FinMeUp is going to consist of 4 main features, of which the main is the online courses that we'll be releasing. So we partnered with various experts in various fields with relevant business and finance topics. For example, when you start your own business, nowhere in university or school that I went through, they taught how to create a pitch deck when you going to investors, or nowhere that I really learn how to do proper research when you're investing in shares or in stocks. And the list goes on of what actual important aspects school and university didn't teach you. So we're going to cover that in the various courses. So that is part of the education part. And then there's other features leading to the execution part. So yeah, we're launching various courses. We're launching various other features. So the other feature that we're also launching now, part of uni, is summarized business news. So I know millennials don't really like to read long articles. So we summarize news in 3 bullet points. So if you just quickly want to understand what's going on in the business world, you read through the summarized news and a few other cool features. So we focus heavily on creating a user-friendly application. So the app is FinMeUp, so that's what it's called. And we launched this year. We actually launched in lockdown, and now we already have a few thousand clients, growing every single day, and we have about 300 to 400 early access signups for the uni so far. So that's very exciting. And end of this month, we're also launching FinMe Tools, which I'm going to keep a secret for now, but that's also very exciting. And yeah, it's been a wonderful journey, and I'm learning a lot. We're all learning a lot. We have a saying: dream, plan, execute, learn, expand. Because there's obviously going to be a lot of failure in every business or in everything you try, and we try to take that to grow, also focusing on the customer more than anything else. So I'm also a firm believer in doing things that don't scale. So in the beginning, also what I did was I had a lot of one-on-ones with our users and asking them what are they looking for, what do they want, and our team just got together, thought of ways to do this in a user-friendly way. So we have a few set rules in place to keep the user-friendliness in the app. And yeah, then we'll look from scale to scale from there. So I'd say 2019 was the year of preparation. So that was when all the development and planning happened. 2020, this year, was the year of execution. And from 2021 onwards, we're going to look to expansion. So we're also starting to slowly plan to expand into Australia, New Zealand, and Canada. Same as Charles and EasyEquities. What an amazing company. But the thing is also with Australians, New Zealand, and Canadians, they have very similar cultures to us. And I'm also, when it comes to investing or business, I like to truly understand consumer behavior. And so obviously it's easier to launch a business in your own country when you can understand the consumer behavior. So that's why scaling internationally can be tricky. But I think, yeah, so looking forward to the next few years, looking for ways how we can add real value to our users, keep them happy, get new users, and become a global financial educator.
Awesome, Hugo. You actually touched on something there around how sort of you didn't receive education on how to put together a pitch deck and so forth. So maybe if you could take us through some of the challenges that you face, especially in the fledgling phases, in terms of funding and pitching your ideas to investors, VCs, and what were some of the challenges that you had there, and I guess the takeaways and sort of tidbits that you'd give to people from that experience.
Yeah, so we are actually busy now with pitch decks and talking to VCs and all of that. So I can't go into too much detail of that. I think Charles will be the better person for that. But definitely the challenges are to actually understand what investors are looking for. Definitely when you're a young entrepreneur or first timer, it's definitely there's a lot of things to learn, and pitch deck isn't just making a presentation make it look good, because VCs are extremely clever, so they know exactly what to look for. For example, one of the things, when I first heard of it, I was like, what is this? And they asked me, what is your burn rate? And I was like, okay, burn rate. And I had a rough idea. But just so these various topics or words or phrases or slang, if you want to call it that, or data analytics, whatever, there's so many aspects that you have to understand, and you have to understand your business completely, your vision. That's also why we're partnering with these various experts. So we have a course that's launching how to start and scale a business. Then it takes you from A to Z, because I have so many friends wanting to start businesses. They have the ideas, but they don't know how. So we created a course for that. So we take them from A to Z, how to start from the beginning, to how to register your business, to how to do all the admin, where to look for data analytics and all of that, to scaling. So go-to-market strategies, and then various ways to look at it to scale. But then part of scaling, for example, is funding. So there's the question, okay, so how do I first get to investors? Then how do I do the pitch deck? All of that. So then we created the pitch deck course. And then also like other aspects like the cryptocurrency. So cryptocurrencies is a massive thing happening around the world with a lot of potential, but nobody really understands what it is, and people want to understand what they invest in. So we partnered with a crypto company experts, created a course for it to understand what it is. So it's a bit off topic, but to truly understand, when it comes to your own business as well, truly understand your product, where you are heading, where you want to go. But yeah, personally, the biggest challenges, to put it simplistic, was definitely figuring out what VCs are looking for. And I'd say the biggest output that I got is that don't be afraid to do something because you don't understand how to. I mean, especially if you're a young entrepreneur, because so many mentors and successful people look to young people that are looking to try, and then they're open to mentor them, because most of the important aspects that I learned, including how to create a pitch deck, I've learned from experts. And the only reason they wanted to help me was because I showed them, listen, I want to learn, and this is how you do it. So you learn as you go, and just have the real vision. That is also what keeps you going.
Awesome, thanks, Ego. Maybe just quickly some housekeeping. Can I just ask everyone else, the audience, to keep their mics on mute? And then while we discuss, as and when your questions arise, please do feel free to drop them in the chat box, and then we'll address them later in the discussion. All right, thanks. Charles, I don't know if there was something that you wanted to add to that in terms of, I guess, challenges that you see that you see young sort of African entrepreneurs facing, and how they can navigate some of those and move around those spaces. I don't know if there was something that you wanted to add to what Hugo said.
Yeah, look, I think that, big challenge for African entrepreneurs is that the VC ecosystem is very immature. So this is not America. And that means that there's just not a lot of capital. There's not competition for the capital. So your capital tends to come from, probably 10 places in this country, and they all follow a fairly similar kind of rigid approach. And their risk profiles and appetites are quite similar. So there's not a lot of, it isn't a diverse and competitive ecosystem. And so the money crowds out the entrepreneurs, which is disappointing as an entrepreneur. Money thinks it's more important than a good idea and a good execution team. So that's the one thing that we have to solve. Fortunately, there are big players who've been successful in the VC space that are looking to solve that. So you see some of, guys like Michael Jordan doing a lot of VC, and other successful businessmen who grew up as entrepreneurs are, starting to enrich that space. As an entrepreneur, and just picking up what Hugo was saying, is the pitch. It's all about, the pitch is something that you don't do once, and it's something that we should all start when we're at school. The Americans do this really well. They're the best pitchers in the world. And it's not because they start when they get to university. Their whole schooling system prepares them to sell themselves, sell their ideas, present themselves. And our schooling system doesn't do that well. And the earlier you start pitching ideas, good or bad ones, the sooner you're going to get, the faster you're going to grow and the better you're going to get. And you won't, it's very rare you'll land on the first pitch. And so you've got to get out there and pitch your ideas, and you start with the places that are most comfortable with you, your friends and family. If they're not, sitting up straight by the end, by the time that you finish pitching, then you've got it wrong, and they want you to be right. The further you get away from your friends and family, the harder it gets to pitch. And I wish I had learned to pitch at a much younger age. I got much better at it as I got older, and I got more opportunities to do it. But one of the things we did with EasyEquities is we went and competed on every single competition that we could. I mean, at one stage, I think we had competed in 17 fintech competitions, which were all pitch competitions. I can't remember, we won probably around 5 of them, but we were always in the finals. But the big benefit of that is, one is you're constantly rehearsing your pitch and refining it and getting really good feedback from VC. And the second one is you're pitching amongst your competitors the whole time, and you're stealing with your eyes and your ears the whole time from things that they do better than you do. So it's a rehearsal and it's a stage, and so you should treat it like a play, and you should do lots of dress rehearsals and stand on that stage a lot of times and surround yourselves with experts and get better and better, and eventually you'll land. You'll land the right idea to the right audience, and you'll raise the money. But yeah, it is a tough marketplace here in South Africa. It really is not supportive for entrepreneurs. The key thing I would say about South Africa is you can't sell an idea here. You're not going to go to a VC and say, I've got this great idea, no customers, no platform, no capability. You've got to do what Higo's done. You've got to actually take the hard yards, build something, prove there's a market fit for it, get customer engagement and feedback, refine the approach, and get it to the point where the VCs it's unquestionably going to meet a market demand and have a market fit. And then you can start to raise money. And the later you do that, the more you'll own. The earlier you start to raise money, the less you're going to own in the outcome. If you can, the harder you can push yourself, the further you can push yourself to not have to raise money, the more equity you'll keep for you and your team, which is a big life lesson for me. And I mean, when I was young, I pitched some businesses. GT was a good example where GT247.com, which is in the group, where we sold it way too early. We gave away 70% to the first people that walked through the door, and actually we didn't really need the money then. We were sort of fine. So we're not doing it that way. In EasyEquities, we've raised money later and really push the envelope on when we need money so that we can retain the majority of the equity for as long as possible.
Yeah, I just want to add on that. And it's really also a vision that I have, part of FinMeUp, and it's actually something we are working on internally, but we're also working on a mentorship type of platform. So Y Combinator in the US is one example. So many great companies came out of Y Combinator, including Airbnb. So they really allow startups the opportunity to mentor them and then give them access to VCs and actually equip them to do successful rounds of funding and scale it from there on. And I think there's definitely an opportunity and a need for that in the entire Africa, for more mentorship and access to larger VCs. And if you actually get a good reputation of making companies successful, whether it's even geographically, and I think if we get a lot more fintechs or startups in South Africa and Africa to actually go that route and make it successful, I think it can really help the South African ecosystem of raising funds.
Okay, awesome. There was actually a question I was going to ask around mentorship, and you touched on it right there. I think maybe I'm going to take a break and maybe just by show of hands ask the audience if maybe they have some questions for us that have come up so far. So maybe if you could just raise your hand, and then we'll take your questions. Okay, it seems they're still all busy digesting the information. Okay, cool. So I think Charles had touched on it just a little bit. So we have a question here which was pre-submitted around, I guess, African education and academia, and whether it's really sort of helping the cause in terms of the entrepreneurial ecosystem, or are we just being groomed to sort of take up a job in the market somewhere? Do we think there's something about it that needs to change? What's the shift that sort of needs to happen in that space to help promote and
I mean, I think the education system is still living in the, 30 in the dark ages, to be honest. I mean, if you think about, it hasn't changed fundamentally in over 100 years. We're still learning about grasshoppers and things that I've never used in my real life. And the real life skills and tools that we need we're not being equipped with at school. So I think, funny enough, I think COVID is going to be the catalyst for the education system to be radically disrupted, because we have bound school to physical locations. So the best school you could go to was the closest one you could walk to, and that meant that you were based on where you were born, you had access. They had an unfair access or an unfair advantage or disadvantage. I think that's radically changed now. I also think, given that virtual schools, I think, are going to dominate the landscape for the next 10 years, and way beyond that. I think the curriculum is much easier to deliver now as well, and because you're not having to create curriculums necessarily for a classroom of 20 kids. You can create curriculums for a country and serve them into a niche and do really well out of it. So you could, for example, create a fintech curriculum and have it served, and there might be a very small niche of people that want it in a single school, but in a country that niche is big enough to create a sustainable business model out of it or a business case out of it. So I think education is going to be radically transforming. I mean, and I've been really impressed with how education has stood up over COVID and changed their business models. The opportunity for Africa is to ensure we don't go back to pre-COVID, is to use this new way of teaching to democratize access to the best schools in Africa, so that and to recognize that the curriculum that we're serving is not relevant anymore. I think there are lots of people out there, really smart people. I've come across a few, and Higo's doing it in his own way as well, that are thinking about how they can change the dialogue of education in Africa. And this is, again, I think as South Africans and Africans, we like to think our problems are unique, but it's not. I mean, financial literacy globally is bad. In America, only, just to give you some numbers there, in America, only 21% of Americans own shares directly on the exchange. Now, this is big bad America, where everyone went to school and everyone went to university and everyone's got access to capital, and so, but investing is a topic they don't understand. And very recently, only, it was a year ago, a company called Visual Capitalist, who created a visual financial literacy curriculum that they gave away to teachers, and it was about 6 months ago, I think, just pre-COVID, they've now put that curriculum into what the equivalent of life orientation, what LO is at school today. And it's the first time that financial literacy has been put into the school curriculum. And I mean, this is 2020. This is, and so this isn't a South Africa or an African problem per se. Our problems are bigger, for sure, but financial literacy is a global problem, and the schooling system is going to have to adapt radically to create a framework where 12-year-old kids can have access to the kinds of tools that they need to understand to run a portfolio. And the thing that is strange about all of this is that actually what we do as financial services kind of guys is much less complex than what kids are doing at school these days. I mean, I've dropped in, I've got kids. I've got a 22-year-old son, 20-year-old daughter, and an 11-year-old. So I've seen them go through schooling, and I've dropped in on them at various years, and I'm embarrassed to say that I wouldn't have passed any of their maths tests in standard 6 or whatever that is, grade 7. Like, the curriculum's just shifted so radically, and it's super complex, but it's not relevant anymore. And I'm sitting there going, like, if they can do this at grade 7, why can't they learn about a diversified portfolio, which is a very simple concept? Why can't they learn about a share and equity and, you know, what it means to be a stock owner? And so, yeah, I think there's a long answer for a pretty short question, but I think fundamentally that COVID has changed the landscape of education forever, and that Africa's opportunity is to not go and build schools. It's to take the best curriculums in the world and make sure they get delivered to everyone through virtual services. And those that live close to schools can consume that digital content in schools. But those that don't live close to schools can consume them through tablets and smartphones that are getting cheaper and cheaper. And so is data.
Awesome. No, thanks. Hugo, did you want to add something there?
So that's definitely, I agree 100% with everything Charles said, and it's definitely something that FinMeUp is trying to disrupt, especially with our digital university launching now. Because I think another problem is that different schools have different, with what we are trying to do with FinMeUni, no matter what age you are, or how rich or poor, or whatever class you are, or where you are, you'll be able to have the same access than someone else. And all the access, or all the information and content is completely relevant to where society is going. And it's continuously changing, and we're continuously adding stuff to actually understand what we are doing and where we are going. And that's so I think school and university, there are pros. I think the biggest pro is that the network that you build, because at the end of the day, a big portion of success lies in who you know. And school and university, you can have great friends, and you can also meet future potential business partners or whatever. So I think that's definitely something. And then they also teach you the fundamentals, or you learn how to learn. But something that also triggered me to look more into FinMeUni was, so in my university, I had a course which was just called marketing. And in that course, for example, we learned the fundamentals of marketing, or why it's important to market. But it didn't actually teach us, how do you market on Facebook? How do you do SEO marketing? How do you get higher conversion rates? All of that. Nothing of the important stuff is currently in university and schools. And the movement that happened now with the digitalization allows this now to be a time to actually completely utilize online learning. And it's definitely, I also believe that there needs to be a radical change in, I mean, schools are not going to go away. It's still going to be there for a long time. But to actually find ways to teach children, or even young adults, to actually grow into financial independence, because that's at the end of the day the goal, is to actually put food on the table. And for that, you need the relevant education. And that, I also think there's a lot of opportunity in that, and a lot of opportunity for disruption. And hopefully we can be part of that movement.
Thank you so much for that. So I actually see there's been a question posted here by Lucky. So the question says, should we be channeling funds towards the early stages of startups when they are ready for commercialization?
Sorry, just say again, please.
So the question is, channeling funds towards the early stages of startups, or when they are ready for commercialization?
So you can go for it.
Yeah, I mean, it really depends on what your risk profile is as an investor. So obviously, the early stage investors take the most risk because there are more questions unanswered. So it depends on the risk profile of the investor. They'll channel it where their risk profile seeks. We need capital at all stages, because otherwise you're going to get stuck you're going to have too much capital at one stage. So our real problem in South Africa is early stage. So typical venture capital. The private equity capital, which is your sort of more mid-stage and can be late stage because of just opportunities that in valuation. We've got a very mature private equity market, but the VC, the early stage stuff, is where the big desire is right now, the big need is right now, because and why is it a big need? I mean, I saw a recent study on a startup. So investing capital in a startup and taking that capital and creating a jobs ratio, so a ratio between the number of jobs created and the capital that was invested versus putting that same amount of capital into a late stage business. And the ratio is something like 100 to 1. So by putting R1 million into a startup, you create 100 more jobs than you do by putting R1 million into a late stage business. So that's why it's so important. And it's a wonderful opportunity if we get it right. I mean, you can imagine what it will do for the economics of the country and the demographic. And South Africa is one of the things I love about South Africa. It's a great place to test your business ideas. It's a really safe place. We operate in rands, which makes our capital cheap, and our customers are vocal and vociferous. South Africans say what they feel, and they tell you if they like you or don't. So you get good feedback really quickly, which is sometimes quite disappointing. But in business, it's better to get the bad feedback early than it is to get it late. And the other thing is our competitive landscape is not that crowded. If I was building EasyEquities in the US, I'd be standing next to $44 million startups. I mean, that have now scaled to $1 billion unicorns, and there's not one of them. There are hundreds of these $44 million startups. In South Africa, building EasyEquities, I stood alongside 2 or 3 competitors that we were competing with, but that's it. And so I needed to be the best of 3. I didn't need to be the best, the 1 in 100. So it's a great place for startup capital, early stage capital to deploy itself, because you've got a higher chance of success here than you have of taking that money and getting the return in the US. So we just need to get better at attracting it and creating an ecosystem for entrepreneurs to build confidence and understanding of what VCs are looking for, and developing the execution skills, so that it's not just about ideas, it's about proper execution, and making sure that we have market fit. Michael Jordan said it, he's a mentor of mine. You talk about mentors. I think mentors are critical. But for every problem is an entrepreneur's opportunity. And let's be honest, South Africa's got a few problems, which is wonderful news, because that just means we've got lots of entrepreneurial opportunities.
Thanks, Charles. There's a question here around regulation and I guess the regulatory environment. Do we feel like how do we feel about the regulation, I guess, in South Africa around fintechs? Is it conducive? Is it more of a hindrance? And what can regulators and government do to sort of advance and fast track the usage of the fintech industry in SA?
Yeah, I'll take this one because I've been doing this for a long time. So the regulators are moving in the right direction. They were very slow and didn't understand the market well enough. And I'm talking about when I came to the market 20 years ago. They certainly weren't ready for a digital age, and the dot-com era caught regulators off guard, and especially South African regulators. But over the last 20 years, they've learned good lessons, and they've adopted much more agile approaches to regulation. And I've seen it play out really in the last 12 months. Fintech has started to get really big in South Africa. You've got some big name fintechs. Luno has done really well, and there's guys like the payments guys. Anyway, there are a whole lot of guys that have done really well. And because of that, the regulators have had to sit up and say, well, how are we going to regulate this fintech sector? And they've created a forum where they brought all the regulators together, and it's been run under the Reserve Bank, and they have been consulting with fintechs. I've been interviewed at least 2 or 3 times and given input, and they're sharing their thinking about how they can accelerate regulation and create regulation that is support and considerate of startup, but also considerate of large-scale business. So almost a sandpit where you can play with customers with very little regulation, where it's safe for the customer and safe for you, but get started. And then as you grow and mature and scale, the regulatory barriers start to get higher, but because you're dealing with more money and more clients, it's appropriate, rather than what they used to have was a one size fits all. If you want to do this, you have to do all of this. That doesn't work. That's just a barrier to entry. I mean, I would love it if they did that, because I'm now the incumbent. So it would stop all entrepreneurs from touching me, but I'm an entrepreneur. So in my heart, I love building businesses, and I've got a few more I want to build. So a regulatory environment that recognizes that it needs to move the playing field as that startup scales is a much more supportive one. And they are thinking about it. I've seen the legislation. I've seen parts of the legislation they're promoting and they're adopting. They're getting great feedback from the fintechs. So over-regulation is a big problem in a lot of jurisdictions. South Africa seems to be taking the course that it's going to right-fit legislation based on the size and risk of the business. So yeah, it's moving in the right way.
Okay, fantastic. Thanks, Charles. I had a quick question on how, and I think Charles did touch on it a little bit earlier, but I guess how COVID has impacted you guys' operations and your day-to-day, and how things have shifted, and what's it like operating in that space. Maybe Hugo, you can take that one first, and then get some input from Charles.
Yeah. So yeah, I think everything that makes its revenue from the internet actually benefited in some way, because the consumer is spending way more, or much more time on their phones or on their laptops or whatever. So everything is more digital. And so for FinMeUp, we are a digital education platform. So obviously, and we launched in lockdown. So it's actually a crazy time to launch a business, but it actually accelerated our vision, because more people spend time online, and as well, now people are way more future thinking of their finances, their dreams, their businesses, because all of a sudden life came to a standstill and everybody had to reflect on their own lives. You were kind of forced to, being in lockdown or whatever. And being a company focused on financial literacy and business education, it actually helped us to accelerate where we want to be, reaching our goals, and moving forward, part of the digital movement. And even if you look at just YouTube, the amount of YouTube influencers just grew so much. The amount of the subscribers they had. If I look at EasyEquities stats, which Charles can cover, and Robinhood stats, way more people are actually starting to invest now. If I look at my friends, some of my friends are now starting to plan their own businesses. Some have already launched their own businesses. Most of my friends already started now investing, where everything that happened, or pre-COVID, nobody did anything. So I actually think this was a healthy movement in a sense of planning for the future.
Yeah, and I think, Hugo's touched on what the impact's been on digital businesses, and I think it's been really well reported. So I'll talk about it from an operational perspective. In terms of running a business, we're 100 staff, and we've 90% of our staff are based in Johannesburg in a single environment. But 3 years ago, I set the group on a journey to where we had a dream, which was to be able to work from where you wanted to work, in the teams you wanted to work in, on the projects that you wanted to work on. And we created a framework. We adopted an agile work framework, and we set ourselves a goal of 5 years that we would achieve that dream. And selfishly, I did it because, businesses, it's interesting. One of the flaws in business is that your most senior people, you want to leave. You almost encourage them to leave at some point, because they're too expensive, and they're also too old. And what's ridiculous and they also, their own lifestyle starts to create a friction point with the business. So, as I get older, I want to spend less time in Joburg and more time at the beach. And that becomes in conflict to the business, what the business wants me. The business wants me there 11 months a year, etc. And the reason I created this agile framework was so that there was no reason for us ever to leave. Not because you moved house or country, not because you wanted to work in a different team, not because you wanted to, live somewhere else. So COVID hit us, 60% towards achieving that, and the business wasn't, we didn't think it was ready. We thought it was sort of 60% ready, and we had to get 100% ready in a very short period of time. And we've been operating now, and you can see I'm sitting at home. I spend 70% of my time at home now, even though my office is down the road. And I find that the blend, I can be much more productive at home if I'm having lots of meetings. So if I've got a day that is filled with meetings, I stay home and I just do them on Zoom, because that's a super productive way to do meetings. But if I'm doing stuff like workshops or innovation or problem solving, then I prefer to get in a room. So then I'll get people together and we'll, whiteboard. And I haven't found a solution to whiteboard online that's effective for me. It doesn't, I like the creative energy that comes from just scribbling things down and other people standing up and doing the same. And so I think the future of work is also here, and that 70% of our time will be spent in virtual spaces, engaging like we are now, and 30% of our time in physical spaces. And I think the nice thing about that is that it's a much more productive outcome. I mean, the productivity spike for me, I'm working longer hours, but the productivity is actually what I used to lose in travel and conversations on days where I couldn't afford them, because you're in an office and you had to get somewhere else, or somebody phoned you on a phone because you're much more accessible when you're in your office. I'm not as accessible. If I've got 7 Zoom calls, I'm on Zoom and no one can touch me or speak to me. I don't have to travel anywhere to execute them. So yeah, it's been an amazing revelation for us. And I don't think we'll ever go back. Well, that's not a thing. I know we'll never go back to working the way we did before. And the big benefit of that is that in COVID, we've had staff who've been thinking about leaving, and they are leaving, but they're not leaving the business. So we've got one staff member who's now going to Australia, and she's staying with us, and we've got a business in Australia, so that's cool. But we've got another staff member who's immigrating to Europe, and he's a senior guy, and we said, well, stay. Let's open the business in Europe. Why? Just because you're leaving Joburg doesn't mean you should leave us. So it presents a great opportunity to globalize your business, and we've all learned how to operate globally now. We had, just to give you an example, we had 4 staff that worked internationally before COVID, and those 4 staff are finding it easier to work now than it was before. And you can think about, they were trying to behave in a virtual environment through a physical office space, and it just didn't work. But now, because we're all operating virtually, everyone's operating on the same basis. So it's been amazing. Our productivity's up. Our staff are happier, operating in a 70-30 kind of way. Everything's much better. So COVID, as tragic as it is in terms of what it's done all around the world, I think it has radically shifted the way we work for the better forever. I mean, I wish I was 25 entering the workspace in this virtual kind of environment where you're not confined to where you live and therefore where you work. I mean, if I was you guys as students coming into the workplace, I wouldn't be putting my CV out to Joburg businesses. I'd be putting my CV out wherever I see an opportunity that my CV might land, because I think businesses are going to hire people virtually now. You're not going to have to walk through the doors on New York Stock Exchange to get a job at New York Stock Exchange anymore, which is a really exciting opportunity.
Thank you. No, thanks both. Thanks both for those responses. There's another question here around sort of where do the opportunities lie within the African fintech space, and what spaces should people be looking to venture into moving forward? I guess that's opinions, thoughts.
I mean, if you just look elsewhere in the world. So Africa, in payments, Africa led the way. M-Pesa is the case study for the world in payments, but very few places outside of Kenya have been able to make payments work as well as they do. In fact, no one has repeated it. South Africa's tried a few times, but payments is the layer on which fintech has to run. If there isn't a strong payments ecosystem where money moves easily and freely and very cheaply, then you can't build anything else. So the key, when I look at the ecosystems and opportunities, the first one I'll look at is, has payments been done? Because I'm not a payments business. I sit on top of payments. If there's not free and easy payments, then there's no service for me. So payments for me are key, and payments are disrupting banking. And I think the difference between a payment app and a banking app is the lines are blurring more and more. So that for me is like a key area. Payments is still, there's huge opportunity in that sector and throughout Africa. And then, the minute you've got a strong payment ecosystem in a country, then the opportunity to sell services on that top of that payment system becomes real. And then all of the other business opportunities emerge. And then what you've got to look for are what are the big things that are missing from that environment that are prevalent in other more mature markets. What was in America what was the next wave after payments, or in China, which is the best payments market, what was the next wave in China? And after payments, which was Alipay, came e-commerce, big e-commerce, through Alibaba. But then importantly, then fintech, bond funds, they run the biggest treasury fund in the world, and that's going to and then now Alipay are diversifying into insurance. They've got a disability cover that they've done which is just it's unbelievable. I think they've got over 50 million people in the first 12 months, and it's a beautiful construct of how they've done it. It's crowd-funded disability cover, literally. But anyway, you look at the flow of what fintech businesses scaled in other markets that are similar to us, and see if those business opportunities are executable in the markets that you're looking at, and then make sure that the ecosystem that you need to make that business successful is there. Otherwise, focus one level down and go to the ecosystem that enables that. And the buzzwords, obviously, InsurTech has got a lot of money and a lot of interest. There's lots of opportunity in it. Fintech and the space that I play in, InvestTech, RegTech, PropTech, all of these are big pillars that are going to disrupt, but not all of them are relevant for Africa just yet. You've got, for me, the base layer has to be payments, has to be banking services, basic banking services first.
Thanks. Thank you. Hugo, did you want to add, or did Charles cover everything?
No, he covered everything. It's a good example is what Square did in the US. So they originally made hardware, these Square machines that any small business could use, and because the big problem was not everybody had credit cards. So they made the whole payment system easy with your card. So that's how they started. Did amazing. Jack Dorsey, the same guy that founded Twitter. But then they also launched the Cash app, which is an app which Kathy Woods basically, she says it's going to destroy banks, which is a bold statement. But what it does is it's an app that you can buy Bitcoin, you can buy shares, you can send your friends money, you can pay for whatever, you can do online shopping. So it's just all in one app, easy to use payment system or finance solution to whatever you want to do with your finances. And there's nothing like that in South Africa yet. And I think there's also opportunity for that. I just think one thing that's difficult, so there is definitely a lot of opportunity in fintech and payment solutions, everything. And there are a lot of startups trying to solve this. But I think there's a lot of regulations, regulatory challenges, as well as licenses that you have to make it work. But I definitely think someone's going to do it well and execute it well. But there's a lot of opportunity.
Okay, fantastic. Thanks. So there's a question that we ask all our guests, and it's really just around. So, what's your favorite book? So it's a two-part question. What's your favorite book, and then what book are you reading? Any book currently?
Okay, so my best book that I've read so far is definitely 0 to 1 from Peter Thiel. He's an amazing entrepreneur and investor. So 0 to 1 is my best book, and I'm currently reading The Lean Startup, but sometimes it's quite difficult to attend or to get time to just sit back and read, which is actually wrong because we all need some free time. But that's where I'm now.
Yeah, so I've got a lot of favorites, but the two business books that were big influences early on. The first one was it's not the big that eat the small, it's the fast that eat the slow. And I can't remember who wrote it, but it really just talks about speed as your weapon in startup, and and gives some really good case studies of companies that move faster. And for me, speed is our biggest weapon, and so we keep using it. We move fast, and moving fast means the fastest cars have the best brakes, and that's because you take the most risk. And that's in our business. You have to, if you're going to run fast, you must build cars that can drive fast. So you need those braking systems. That was the first one that had a very big influence on me. And the other one that was more recent was Good to Great. Also very valuable insights in scaling a business. So it's not easy. It's easy-ish to build a good business, but to scale it to a great business, one that everyone remembers, is really hard, and very few people do that. So I've taken a lot from that. And then outside of that, I think my favorite. I read a lot of things about horses, and currently I'm reading Frankel, and I just love horse racing, so it's a passion for me.
Okay. I think we've come up to the last sort of couple of questions, probably just 3 or 4 questions left. So maybe let me just put out a feeler to the audience if there are any questions that they'd like to ask before we move into those final few. Show of hands, drop a message in the chat. I see 2 hands, just give me a second. Tatenda.
Yeah, I'll ask. So I've actually read a couple of journals with respect to fintech in China, and it actually comes out that China has been extremely successful in importing ideas from the US, especially. And they've been so good in executing that to an extent that those ideas have been extremely successful in China rather than in any part of the world. And the reason to that was the advantage of them having a huge market share and a huge population base to work with. And now I'm looking at us down in Africa. If you want to implement solutions, I mean, we do have a huge African market, but in terms of per country, the market is extremely small. So, I mean, what should we be looking at, or should we be considering not just focusing in a country, but probably taking a continental approach to entrepreneurship or founding, entrepreneurial ideas?
Yeah, your China example, it's funny that the Americans are quite upset about them stealing their ideas. You've got to remember that Steve Jobs stole all of theirs. He didn't invent the iPhone. What he did is he took components and wrapped them in a better user experience, and nothing inside the iPhone was new or invented by him. It was wrapped by him in a better user experience, and they were all Chinese components. So I think they're just getting them back for stealing innovation. And funny enough, there is a big difference between innovation and pioneering. Innovation isn't invention. It's actually in a lot of instances just presenting old ideas in a new way. So I love stealing ideas from competitors. I do it all the time, and wrapping them into a better user experience if I think I can. Just to your point about Africa, I mean, it's a fragmented market, which is lots of languages and cultures. That makes it difficult. The second thing is the regulatory framework is different in every market, and that makes it really, really difficult. So if you're a fintech player and you want to play in Africa, the regulatory framework is almost impossible. I mean, if you think about Europe before it became a European Union had the same problem: fragmented, lots of different languages, cultural barriers. The banking system, funny, in Europe didn't even speak to each other, and still in lots of countries, even though it's one union, the banking system doesn't speak to each other. And they've been at it now to create a union so that it's easier to do business across Europe. So they've standardized regulation, standardized banking protocols, and go back to Africa. We're not even we've heard talk of an African Union, but there are no plans and no. So very difficult to create a pan-African strategy unless you're operating in a space where you don't require regulation. So or regulation is light. In my business, regulation is really heavy. So for me, I've got to choose market by market, and I've got to choose the best fit markets first. So I've got to do a lot of work about thinking about which market is best for me, and then going after that single market. I can't go after it as a African opportunity. It would be wonderful if it was, if Africa get its act together and create a common regulatory framework, and banking system spoke a common language, so that we could play across Africa. Then, geez, what an incredible opportunity. But I think we're a long way from achieving that. So, going to markets where you've got scale in customers is going to obviously help you accelerate your business quicker. But having said that, you're also going to find that in large-scale markets, you've got more competitors. So that's a trade-off. For me, I like countries that are in similar size to South Africa, and have the same kind of South African opportunity and setup. And that means that they're going to be less competitors. The same kind of ecosystem environment that I operated in here is going to exist there. I don't want to go to places like China where, yes, there's a billion market opportunity, but you're up against 50,000 customers, 50,000 competitors.
Thanks, Charles. I hope that answers your question, Tatenda. There's a second hand here. Jamba?
Hi. My question is for Charles as well. I think one of the few, in thinking the first 10 minutes, you mentioned democratizing investing. Coming from Zambia, as much as I've had interest in investing, I was always put off from buying shares just because of the process that it took. The market there isn't very active as well, but I would think it's also a chicken and egg situation, because you don't, young people, as much as they want to invest, there's a lot trying to get into entrepreneurial ventures and starting as much as possible just because of the environment that's there. But investing is definitely one thing that the market would be ready for, but it's not even a regulation thing. It's just how difficult the process is to buy. So with that aspect of democratizing investing, do you sort of have a roadmap with regards to African investments to try and get a lot more young people into investing?
Yeah, I mean, it's for us, the focus has been to go to the friendliest market setups first. So, and where there are healthy fintech ecosystems. So that's why Kenya was so attractive. And if you go back to my statement on payments, we couldn't survive in Kenya if there wasn't a very healthy payment banking system. And they've got, arguably the best in the world. In fact, not arguably, I think it is the best in the world. So we rest really well there. The other thing that's in their favor is the regulatory environment is friendly, but there's no exchange control, so they can move money freely in and out of their country. And then there is a very strong, there's a mini Silicon Valley going on there. So the ecosystem setup is really strong, which gives us a much higher probability of success. We don't, as much as Zambia, and I've got some Zambian heritage. I was probably conceived in Zambia and born in South Africa. So my father grew up there. And I would love to be in places like Zambia. Ecosystem setup is too weak for me. I can't spend my time, as much as I'd love to, I can't spend my time going in and setting up the ecosystem. Sadly, that's the sort of plight of someone who's, I work for a listed company and they want me to deliver the best possible return for their capital. And so they're going to keep directing me to the places that present the best opportunities, and that will be where the ecosystems are strongest. So, Zambia, I'd love to go and we'd love to take our business there, but the ecosystem's really weak. And so it would be a long time before we get there. But the one thing that would change that is if we were approached by a strong partner on the ground, a bank, a life insurer, I don't know, a stockbroker. I don't think there are big stockbrokers in Zambia, but maybe, or even the exchange, and they wanted to do it with us together, then we would do that. So there are markets that we're not targeting, and I'll give you an example. There is Namibia. So Namibia, the market setup is not great either. I mean, it's a tiny population, and regulatory environment's quite high. But a big broker, the market dominant broker in Namibia, approached us and said, listen, can we just white label your services and sell them in Namibia for you? And we're like, yeah, for sure. Like, why wouldn't we do that? So I would see the same kind of thing being able to play out in the second tier or third tier markets that we're not interested in doing it ourselves. We'll partner institutions on the ground. And I guess we've got to do more of that and explore some of the smaller African markets to see who those partners are and actually start to campaign them and see whether we can deliver partnerships so that we can truly democratize it.
Charles, if I was to take you up on that and find you the stockbroker, would you be keen?
Yeah, man. I mean, I'm always keen. If we find the right partner, it's not difficult for us to do. In fact, and I'm not downplaying this, but it's really easy for us to turn on another market. So yeah, no, not difficult to do. If you find me the right partner, I'll come to Zambia.
Awesome.
Awesome. I think that's it for audience questions for now. So I think the last, I don't know, I don't even know if there are a couple of questions because they all really centered around sort of what does it take, what advice would you give, sort of learning lessons that you've had over the years, sort of tidbits that you'd want us and anybody looking to venture into the fintech space. Sort of what would those be? I think these would also act as sort of your closing remarks, just sort of little takeaways for us.
Okay, yeah, I'll go first. So for me, it is just be extremely agile and adaptable because you're gonna learn as you go. And an example that I got from FinMeUp was when I originally got the idea. So it started when I made a WhatsApp group with my friends, and I just shared with them, which was my passion and always been, some of my research on companies and my opinions on business. That WhatsApp group, I saw there was opportunity in that. So I pursued it, sat down with a paper, drew how a possible app could look like. And I thought, okay, this is how the app's going to look. When we launched, nothing was like the app itself, like originally planned. And ever since then, continuously listen to the customer. That's also something I learned. And be able to adapt and be agile and look for new opportunities. And most important of all, don't be scared to try. So when you get an idea, I'd say pursue it completely. Whether it's a good or bad idea, just start doing the fundamentals. Look at a business plan. Look at the why. Why are you doing this? What is the vision? And when you continuously do that or pursue your ideas, you'll get into a rhythm or momentum of actually learning how to do it. And every time you do it, you're going to do it better than the previous time. So when you get the idea, pursue it, talk to people, tell your closest people the idea, pitch the idea, and learn from it, and continuously learn and look for ways to grow and scale.
Yeah, I think that's a great answer. I mean, and you've summed up pretty much everything I would say. I think the one thing that has stood me in good stead is you have to be very comfortable with failure, and you actually have to celebrate it and embrace it, and then importantly learn from it. It's something I have a real problem with in the South African culture. Is we don't like failure much. We're not accepting of it, and it's something the Americans get very right. I mean, one of the first questions a VC company asks you when they're interviewing you, if they're American, is, so have you failed? And tell us what you learned. And all they're trying to do is they love the fact that you've failed, and two, they love the fact that you've learned from it, because you're not going to make that mistake again. The difference in South Africa is they ask the same question. So, have you failed? And you say yes, and they walk out the door. And the reason I think it's a cultural problem. I think South Africans, we're not taught how to manage failure, and we actually almost put failure in the closet, and we've got a strong history of really spectacular failures that we've been hiding for a long time. And so culturally, I think we're not good at it. And I think that if you're going to be an entrepreneur, your biggest weapon is your ability to accept failure publicly. So, to start with in small places with your friends and family, but as you get bigger and bigger, very publicly in very public places. And if you take every failure as a lesson learned, and you intrinsically, look to understand it explicitly, what led to that failure, you won't make that same mistake again, and you just get better and better than your competition. And that's stood me in good stead. I've had a lot of failure in my life, very publicly, and I regret none of them, because all of them were the foundations for EasyEquities. I mean, EasyEquities was born out of 17 years of failure, and I've asked myself so many times, could I have done it earlier? And every single time I just go, no, the lessons I learned then wouldn't have been learned. We wouldn't have applied it in this business model. So failure is a great thing, and embrace it, learn from it, and move on from it quickly, and you will be successful. But if you give it one shot, one idea, one raise, one failure, you've got a 1 in 1,000 chance of making it.
Thank you. Thank you both so much. Just before we close, actually, there's a question that's just come up for Higo. It's a bit of a long one. So in my sporting community, we have many seniors and sub-juniors too, all of whom need financial options in either education or re-education. You guys are doing a great job of offering options. How should those of us on the ground best direct them when they lift their eyes to the ceiling at yet another lecture on life? Yeah.
All right. I struggled to hear the complete question, but I'll answer on what I heard. So when it comes to education, just before I answer, I just want to make sure, can you maybe just read it again, or just tell me the basic question?
Okay, the real question is, how should those of us on the ground best direct those who are in need of financial education, re-education, when they lift their eyes to the ceiling at yet another lecture on life?
Okay. Yeah, so I've never been a fan of lectures. I think I attended probably like 20 classes a year when I was in university, and I just did self-study. So I've never been a fan of lectures. I got quite bored, and then when I was in the lecture, I just continuously got ideas of businesses I wanted to do, or looking at stocks, whatever. So I'd say just do your part when it comes to education. Do what you have to do, and then when you find time, chase what interests you, because that's where your passion lies, and where your passion is, a strong vision will come. And if you have a strong vision, you have the inner motivation to make it work. So I truly believe if you are passionate about something enough, you'll make it work. So when you're in that boring lecture, if you really don't find it useful, maybe look at resources online. So FinMeUp, you can look at FinMeUp. There's various podcasts, there's various notes, there's stock picks, there's digital courses coming now. So that's one thing. Another thing you can do is, I don't know if you're going to be able to listen to YouTube, but YouTube is a great free resource to learn as well. You can basically learn anything you want there. Then you've got ShareNet, then you've got MoneyWeb. So there are various resources. But I'd say educate yourself in what interests you, and then find a way to monetize it. And then I think you can really make a successful business out of it. So if you're bored, find something else to do while you are bored, because that's just a waste of time. Because when you're bored, you're definitely not going to listen to what the lecturer is saying. So find some resources and chase that dream, chase that passion, and monetize it.
Awesome, thanks. So I think that will probably bring us to the end of the session, especially taking into account what you guys had said and those little tidbits you had for us. So I think at this point, I just want to thank both Charles and Higo for making the time. to come and discuss and engage and take all our questions. We really, really do appreciate it. This is really valuable. And to the audience, thanks so much for taking the time to dial in. This was really fantastic. I don't know if Charles or Hugo have anything else to add before we just wrap up.
No, just to say thank you, man. I love speaking to people that are taking their financial future seriously. So hopefully some of what we said rubbed off on you.
No, it did. Thank you.
Awesome.
Right, no, then I think that's it. Then we can probably close here. Thanks everyone. Thanks Charles. Thanks Hugo. Thanks everyone for dialing in. And cheers. Have a lovely evening. Bye.